Hi guys, Yulianna is here. Today we're gonna talk about main beginners' mistakes in stock market. Investing is a great way to make money, but sadly, many people when they start investing, they make mistakes. When you are new to the investing, it's very possible that you can make some mistakes. So by the end of this video, you will learn 11 most possible mistakes majority of beginners do. And I have made many of those mistakes before too. It's very important to understand how the process works and to make as fewer mistakes as possible, but the best not to do them at all. If you are new to my channel, in my videos I talk about making money, saving money, investing, some business tips, productivity and much more. So stick with me to the end so you will have a complete picture how to avoid new beginner's trap and invest your money safely and eliminate your losses as much as possible and make more money. First one is waiting too long to invest. Many people, they prolong this process of investment really for a long time. Some of them, they think, oh, I have not enough money to invest or I need to have thousands of dollars to invest. Honestly, you can start investing with $100 or even less. You can read really many books about investing. You can watch so many like these free videos. But the best is just to start, just to begin investing with that amount that's comfortable for you and just start having your own experience. You might possibly make money, you might possibly lose money, but with time you will get more wisdom so you will be able to avoid those mistakes in the future when you invest bigger amount of money. Next one is speculation. This is when not seeing difference between gambling and investing. Don't follow hype. The main point of investments is to minimize your risks as much as possible and to maximize your return of investments as much as possible. There are many good books you can learn about investments, but the most popular number one selling book I would recommend you to read is The Intelligent Investor by Benjamin Graham. So please read this book and you will have much more clear picture about investing and you will be able to avoid many traps many beginners do. Next one is choosing the wrong strategy. There is a big difference between long-term investment and short-term trading. Investing is not the same as trading. Trading, this is when person buys it and sells it during short period of time. Investing, this is when person buys shares of the companies for a long period of time. Trading is much more risky. Trading is kind of gambling. Everything might change from morning before lunch. People buy and sell and basically they make small commissions in difference for those stocks. So many studies shows that day traders, they lose so many money and they don't make as much as they promise you to make. And only 1% of day traders, they make some reasonable amount of money. However, in so many courses, they will teach you different. They will promise you if you buy this $1,000 course, you will make millions of dollars in 1 year. Please don't fall into this trap. If you want to buy somebody's course, check that person, see if that person offers some free information, if they are really professional, and if their style of trading is suitable for you. Check them and make sure that you invest your money into the right person. But the best, start and try doing it safe. Investing for a long period of time, it grows slower but steadier and less risky. And this is that strategy which I would choose. Next one, not doing your own research. Investing requires research. It's not like buying a bar of chocolate that you just go and buy. You need to make research of that companies where you want to invest. Research before you buy. It's good to analyze company's background, its past and current performance, its leadership, how much debt it holds, how much cash it has, what is the plans of that company for growth. Start teaching yourself about financial market. More you know about it, it's easier to make right decisions. If you analyze properly and you do your own research, you believe in the future of that company, you might have a good experience investing in that company. Next one, too much risky. Try to eliminate risks as much as possible. All of us, we want to make money, but try to invest that amount of money you feel comfortable to invest. Don't go to borrow some money and have hopes that in 1 year you will return that amount of money and you will make much more. You might go in much more depth. Try to see reasonably how much money you can invest, so you invest that amount of money freely, easily, and wait for good returns. And try to do it safe. Investing your last money that you had to pay for your rent or for your food is terrible idea. Just invest that amount of money you feel comfortable to invest. Next one, not setting realistic expectations. Many people, they think that company continuously should grow, so they expect that their investment continuously will grow. In reality, it's every time has waves. Sometimes it grows, sometimes it goes down, and it's okay, it's normal, it's market. When I started investing, first 2-3 days, it was growing and I was super happy. I made $200 after 2 days, but on the third day, it was down for $180. I still was comfortable because at least $20 I made, but over the long time, it still was growing my investment. So it's fine when you see some waves, and just be ready for it. There will be up in the market, but there will be down in the market too. When you invest, count it and don't follow that hype that if everything goes down, you rush to sell your stocks. So wait and you will see over time, because you remember there is long-term investment and short-term trading. Past performance is not guarantee future performance. Next one, paying too much fees. I will not recommend for you one company you should choose for yourself. It's more personal decision, but I would recommend for you to choose one company, you make research before, you feel comfortable doing business with them, and they don't charge so much fees for you. Many people think if you pay more management fees, so you will have more returns in the end. It's not working all the time this way. You should do your homework too. So please choose one company where you don't spend so much money for fees. I don't feel comfortable paying much fees. There are some funds which requires active management work, but try to choose that company where you pay as less fees as possible. In the end, this is your money and your profit from investment. Next one, trying to time the market. There every time will be good time to invest and not so good. Every time will be some economical crisis, some unexpected things. I invest in good and bad time. Actually, the best thing to do is try to invest regularly. For example, in my case, I am investing certain amount of money bi-weekly, and I don't care if in that days market is up or down, as long as over the long period of time my investment and my return of investment is growing. So over the long time, it will smoother that curve and still you will grow. Don't wait that perfect time. Every time something will happen, so you will just wait and you will postpone the time when you start investing. Sooner you start investing, more money you have later. Next one, letting others influence you. Try to think yourself. Try to analyze market. Try to analyze that company where you want to invest, and don't follow somebody else's recommendation. It might be your friends, co-workers, some expert. Choosing stocks based on somebody's recommendations, it's really not a good idea. Usually experts, they are a bit biased about that thing because they will not recommend to you buy stocks of some companies that they don't own that stocks. So try to analyze and make decisions yourself and see. If you are not sure about buying stocks of some certain company, better don't buy it. Try not to follow crowd too much. Invest in some company you personally believe in. You use their services, you made some research, and you really believe in the future of that company. Next one, falling in love with one company. Don't invest so much money in one company. You should see, you should check, you should analyze that company continuously and see, for example, sudden change in leadership, in management might give you some warnings. And if you see it happen, try to see and analyze if it's worth keeping that money there. Next one, not diversifying your portfolio. Don't keep all eggs in one basket. You should try to invest and spread your investment with different companies you believe potentially. You can't know which company will perform better over the time, so much better to have your portfolio and your investment in different companies in different spheres. If you don't know yourself how to diversify it properly, just go with mutual funds and choose a suitable portfolio to you according to risks you are ready to tolerate. If you found value in this video, please hit the like and subscribe to my channel so you will not miss any new video on this channel. Please write me in the comments which mistakes you did when you started investing. Thank you for watching and see you in my next video. See you soon!